Welcome to TradeTheNBI.com. This is Jonas Reports for the 22nd. Well, we're starting off with some significant softness here as, well, it began Friday as Power Mo started to fade. We've continued to see red DOC fade and where green just couldn't get any momentum. And this has all been this rejection here of the orange not dipping below. It generates weakness. And so as we've been talking about it as the fade of, the new money that comes in at the beginning of the month starts to take place, you get a little bit of softness that starts to build, and we weren't getting any higher shakeouts in relation to the overall highs. And so what I've been looking for is to see a dip below the red line that would really cause a significant break. We're right at the ABM magenta kind of popped on that one just a fraction. The NQ was a little bit weaker earlier, started its soft trend sooner. This was that breakaway momentum that began the run for the NASDAQ, at least to begin its move into the softer territory. We've seen this also with the gold has been flatlined. And I always talk about this meeting of the Azure line right here. When the two of them typically meet is when we start to see that weakness really evolve. And you can see we are below on the NASDAQ. And the NASDAQ has been the leader of this, and so it's no surprise. And if we even go back to the S&P, you can see that we've just had this flatlining here. As the momentum starts to build, it then just gets killed, and not surprising. So the NASDAQ leading this charge to the downside overall. Tiny support here at base of gold, but it's been making new lows. It just came back and revisited this dip below the red line, which was an inevitability that it would come and test that again. And has done that. And again, we're still not seeing the inflation necessary to really drive gold. And that's been a problem. And that was what really supported, actually, we can look at Bitcoin. It had supported the large move, but it got ahead of itself there. And as soon as the DOC spread came in, it's also a good one. See here, we had the gold rising, and right here began to plateau. But the real decline began right as the Azure met the gold line right there, and that's led to the current setback. And it's most likely to a typical 50% retrace of the move. I kind of went over that on a Skype chat, how I typically do those from a progression if you're looking at like a ABC move, assuming that there's support within that general run. We can throw GameStop in there. Of course, it's taken out the target that we had way back from the original. So it's just worth mentioning that the euro right back at its previous point again. This is the expectation that the stimulus is really going to continue to be the policy of the U.S. From an intraday standpoint, Friday was fairly clean action, relatively speaking. Here you had the steel dip back to that 0 point, pops up, and then when the orange comes back down, it's usually where we get our conversion, and certainly when the green passes over. Actually, I should have that marked already. Had some troubles with the TradeStation that crashed, and had to put everything back on again. It happens. So, popped up, of course, classic DOC spread here at the same point. There's that plateauing, and then also the flat line of the Azure. And that gave a little bit of a retrace, started to turn around as the momentum built back into that shakeout readings, as well as the Power Move 2 turned up. And wasn't able to really sustain anything, and you ended up with additional DOC spreads. But see, this is something I talked about too on there. When you get a DOC spread where you still have rise and shakeout, you got to wait for that beginning. It needs to begin to fade off before you really get a strong one. It's usually seen when you get that yellow line move below magenta, and that's really what precipitated the significant pullback right back down to the algo level, which we were talking about real time on the Skype chat as it was taking place from this original signal, and that it was easy to follow. The difficulty has been getting the programming to understand this concept of when, yes, you get this crossover, which has bullish tendencies, particularly for the orange dips, but usually it's after an extended run where you don't have it. Then you get the dip back to the zero and the pop up, and then when the orange goes, that's actually a more significant buy. And that's in fact was exactly how it worked from the 23% line there, moved it all the way up to, a declining 50%. And then we already had a DSC spread that was in place. It began its momentum move right at the separation there. And that led to the power mode 2 drop off and started to fall. And once it started to fall, you had the gold rising, which meant the momentum of that downturn actually had more significance. And in fact, that took out the lows and made new ones, but did that nice little dip, pop back up, orange down below. So finished the day right back up at the 100%, though the 100% of course is a declined version. And then in the post market, clean DSC spread started early, and that was confirmed with the declining power mode 2 and the magenta crossover, and then shakeout just fell off. And of course, this was all off positive extremes. So again, that's just a matter of looking at it, and it was right back at that same, in this case, just under 3,900 level. And so filled that right back in, and that's led to the cascade move. Now, we had this dip right here to the zero, and so when this came down for the orange, looks good, but you've also got to have a shakeout that's better than the negative 13.5. It's pretty hard for that momentum to build when it's in that lower one. So when we get to this setup down here, you get a little bit more oomph to it with zero reset. Now we're actually dipping to that steel. Came all the way to, you can see it right down there, 0.36. I always say anything within like that half point range. So any tip up here where orange dips should give a more sustained up push going forward. And I think that's the critical way to look at it, this particular point. But we've had quite a few other positive extremes from way back. We could go and fill in some of this gap range, but I think that that's where the pull is going to be back up towards the 38.90 range. And or to the bottom side, on a breakdown, we're looking more closer to that 50 range. So it's one of those two opposites. At this particular point, you're still looking at some pretty soft shakeout as well as DSC red. So you're just going to have to build some momentum to be able to pull that back up. This was a pretty decent cascade and also done in the pre-market. So as activity picks up, we'll see if there's going to be any broader cascading to that. So it's going to be a pretty good start to the week, and as we move towards the end of the month, February's have been typically tough, so this has performed quite well given what you would think the historical range has been. So all in all, good action. As always, though, I will update anything on Skype chat as it's relevant. Trade well.